we're now going to consider income statements, and we're going to look at what it means to look for profitability in our operation. Previously, when we were looking at our financial statements and considered the balance sheet, in our balance sheet we were looking to see what our assets were, everything that we own, relative to our liabilities, which is everything that we owe, and our goal was to determine our owner's equity in our operation. So we were viewing the financial picture of our operation at one point in time. As we switch gears and we start looking at the income statement, now what we're going to consider is we're going to start looking at the revenue that we've made, and we're going to compare that to the expenses that we've had to spend, and we're going to do that over a length of time over a given accounting period so we can see whether or not we've had any profit, or in other words, net farm income. So oftentimes you'll hear an income statement called a profit and loss statement, or a P&L. So when you hear people talk about a P&L, they mean their income statement. They mean that statement that shows them whether or not they've made profit over the past year in their operation. We also might call it an operating statement. So as we distinguish that a little bit, the balance sheet showed that financial position at one point in time. So in other words, we might look at the balance sheet on January 1st. Or maybe we'll look at the balance sheet on December 31st, and we want to know what do we own and what do we owe on those dates. On the other hand, the income statement summarizes revenue expenses over a period of time. So we want to know what has happened between January 1st and December 31st. During that time frame, what have we made in profits? In other words, what have we made money on, what have we spent money on, and what have we generated in net farm income? So the income statement is going to look something like this. In terms of a format of it, it's going to have major categories of revenue and expenses. We do kind of break those expenses down a little bit more deeply and split them up a little bit. And then we're also interested in anything that we've sold that we might have to consider a gain or a loss on that sale from. So our revenue item sits at the top, and we include all those items that we have made money on. And then we fall in with our expenses, and we consider all of our operating type of expenses along with our interest expenses to get some total expenses, and that will give us what we call our net farm income. So let's take this a little bit more closely and look exactly at what it is that we're having. When we think about the term revenue, revenue is simply all the income that we've received from anything we've done in our farm business activity. Okay? So the types of things that we consider revenue items, the first item is the biggest category for us in agriculture, and that is the case of selling crops or market or feeder livestock. Okay, so when you have corn sales, wheat sales, soybean sales, alfalfa sales, you sell some feeder calves, you sell some feeder lambs, any type of livestock or crop sales that are market or feeder, or the crop inventory you've grown, those are all going to be your revenue items, and that's the biggest chunk of what we actually have in revenue. Some other things that we could possibly have as well, we could have some government program payments. So perhaps maybe we have some government involvement in government programs, and we've received some income from that. If we have some CRP payments, if we have some other payments that have come from any of the programs, then those are going to be considered income to us as well. And then anything where we do something for someone else in our farming enterprise, those things would be custom work income, and that would also be part of our income. So our revenue is only those things received from our farming activity. Maybe there's some other farm income. Maybe we sold some wool off of our sheep. Or maybe we have some feed that we sell as part of our business, that's part of our farming operation. And there's some other farm income. But what I wouldn't do is I wouldn't take things that are off-farm income. So if there's other off-farm sources, maybe I sell my vehicle, or I sell some equipment or things like that. I don't want to put in that full sale price. I am going to look at the gain or loss on the farm machinery, but if I just went and sold my car, that's not something that's going to go in my revenue in my income statement. I'm only looking for the business activities that have occurred. So these are the major categories of the things that are going to be included in my revenue section. My expense section, on the other hand, is going to have those items that are the costs for my farm business. So any costs that have been incurred, most of those are going to fall into the two big categories, which are crop expenses and livestock expenses. Crop expenses are things like fertilizer, chemical, seed, those types of individual input costs that I have in order to produce my product. Same thing with my livestock. Those input prices like feed or vet costs, when I purchase feeder livestock and hold them over and feed them and sell them as market livestock, the cost of those things are going to be those things that I would consider my major livestock and crop expenses. But I also have general farm expenses that have occurred too. And so those general farm expenses are things like repairs and fuel, property taxes, insurance, all the cash ones, those things that I've actually had as expenses. So it's not something that's maybe an opportunity cost where maybe the value of an opportunity to do something else could be this. I'm looking for whether or not I really made profit on my farm. So I've got to only include those items that actually are part of my expenses. Depreciation, on the other hand, is an expense that is a non-cash expense, but I do include it because I have to show loss of value in my machinery and equipment and buildings. Those things that do depreciate, breeding livestock that has been purchased. Those things have lost value because I've used them. I need to be able to show that expense in the depreciation. So depreciation is considered a tax-deductible expense, and it is one of our farm expenses that we can include in our income statement. So when I think about those things, I've got crop expenses, livestock expenses, and general expenses. Within my general expense category, I do have interest on loans included as an expense. So if you think back to what we've been doing previously on loans, we've done a lot of things on loans. We've set up equal total and equal principal payments and so on. We've determined what we do to pay back a loan, and we know this much. Interest is a cost or an expense for borrowing money. So when I borrow from a bank, I've got to pay them back the principal I borrowed, plus I have to pay them interest for letting me borrow their money. So the interest is a cost or an expense. The payment I make back to them in principal paid is a repayment. It's not an expense. So it's like you give me $100 and I give you the $100 back. There wasn't an expense in that transaction. You just gave it to me and then I gave it back after I generated the money in order to pay you back. So it's a repayment. Therefore, principal payments on loans are not included on the income statement. The interest is because it's a cost for borrowing money. So we want to keep those things in mind when we think about setting up that income statement. So the general format is going to look something like this. We're going to have our revenue section, and again, we're going to find total revenue. We're going to have our expense section. In our case, we're going to break out our operating expenses from our interest expenses, and that's going to give us our total expenses. Our revenue minus our total expenses is going to tell us what our net farm income is from the operating part of our business. So we're going to call it net farm income from operations. But then we're going to have those things that we have done in our business where we've sold some machinery that we've had for a while in the farm, or we've sold something that's more of a capital asset. Those things are still going to get included. They're just going to have their own section. So if we have any gains or losses on the sale of capital assets, that's going to go in its own bottom section at the bottom. And that gives us our bottom line net farm income, which tells us, have we made any profit or not?